On today's episode, we are going to take a look at two growth stocks that Ark just bought yesterday. Both these companies, I want to say many investors might consider either a COVID play or more like a working from home stock. But I want to say that's not the case. They do have huge growth potential ahead of them. So let's try to find out. Let me just share my overall thoughts. The first company we are going to take a look at is Zoom. You might know them from the online conference style company, but they do so much, right? They do like phones, they do Zoom from home. They also have like places where you can host webinars and even charge, right? So right now I also wanted to take a look at the top two online mobile operating systems in United States right now, and Zoom is the number one downloaded under the category business for both operating systems for July 12th of 2021. So we can see this is still a very popular business, a very popular app. So Zoom right now is traded under the NASDAQ as ticker CM. It is up about 0.64% as I am recording this episode, and it has a market cap of $112.55 billion. If we take a look from its 52-week high, the stock has definitely seen quite a correction, down about 32.86%. Obviously, there's been better buying opportunities. So if we take a look, Zoom is acquiring a few companies. On June 29th, they are set to acquire Kite's GBM and Kite's team to help enhance Zoom's machine translation capabilities. Zoom also launches Zoom phone appliances empowering the hybrid workforce. So they're trying to make products that will be able to, for example, this hybrid workforce where a lot of companies I know are doing a few days in the office and a few days at home. So they're developing products that will work well with that environment. Next, if we take a look at Zoom's most recent earnings, which they reported June 1st of 2021, and this is for the quarter that ended April 30th of 2021, the revenue was up 191% compared to the same time last year. Number of customers contributing more than 100,000 in trailing 12 months revenue were up 160%, and they have approximately 497 customers with more than 10 employees, and that's up 87% compared to the same time last year. So Zoom is still growing at crazy levels. Some other recent news that they didn't announce: on June 28th of 2021, they did hire Ricky Kapoor as the head of APAC. And Ricky used to work for another company with similar, he was the vice president of sales and marketing operations for one of the tech giants for APAC as well. So it's definitely a great move, and you can see how Zoom is really trying to expand their business into that market. But before we take a quick look at fundamentals, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. If we take a look at fundamentals, Zoom is expected to grow 17% on average for the next 3 to 5 years. So huge growth company. They are profitable in earnings, but more importantly, they're super positive in cash flow from operations. With this type of cash flow is what allows them to be very heavily on acquisitions. And I believe this is how they're going to keep growing over time through numerous acquisitions. If we take a look at their balance sheet, they have about $4.7 billion in cash, no debt to their name. Again, they just recently did the acquisition, so it might change in the next quarter. The second company we are going to take a look at is Spotify, right? This is another one that many people thought was only good during the working from home, as people would listen to music. But you got to remember, right, as people commute, they want to listen something to stuff, right? In my normal commute, I turn on Spotify and I listen to music or podcasts. I feel like I actually listen to it more in my commute than I do while working from home. So very similar to Zoom, Spotify, if we take a look in the music category, they are the number one downloaded in both top operating systems in the United States for July 12th of 2021. Spotify was number one there. Spotify, some recent news about the stock. Actually, let's take a quick look at the stock price right now. As I am recording, it is traded under the New York Stock Exchange as ticker SPOT, SPOT. It is up about 2% today. The market, especially tech, is a bit green today, but we can see from its 52-week high, the stock is down 27%. Definitely quite a correction, and it has a market cap of $50.6 billion. Spotify, one thing I do want to mention is they are raising their prices this quarter. They kind of raised it already in certain parts of the world. For example, Spotify Family increased by $1 in the United States. In the UK, in the United Kingdom, Spotify Students increased by about €1. Dual subscription also increased by about €1. And Family, the Family user subscription increased by €2. They are also doing similar price increases in other European countries. And I do believe this is going to be a good portion of how the company is going to be building up that cash flow from operations. Right now, we can see premium subscribers in their most recent year was about 158 million. So 158 million. So now times that 158 million by an extra $1 or $2, it's an extra at least an extra 158 million in revenue. So definitely great to see the company. They're gonna grow not just by subscribers growth, but also by that revenue growth. Some recent news also on June 15th of 2021, Spotify strikes exclusive deal with Call Her Daddy podcast. This is a very popular podcast. We've seen them in YouTube and just really all over the news. So Spotify is still trying to grab exclusive markets to grab more customers to listen to the product. Another one on May 20th of 2021, about a month and a half ago, they signed partnerships with a company that has audiobooks, and now those audiobooks are able to be streamed on Spotify. So we can see Spotify is definitely making big moves. I can see why Ark Invest, and later on we'll take a quick look at technicals. So right now, Spotify is expected to grow 16.6% on average for the next 3 to 5 years for its revenue. So a nice growth company. They're not profitable in trailing 12 months in GAAP earnings, but they are positive in cash flow from operations. I want to say after that price increase, I'm pretty sure they're going to have higher cash flow from operations as well. If we take a look at their balance sheet, I really like it. They have about $3 billion in cash and about $1.2 billion in debt. Unfortunately, I was a bit spoiled with Spotify when I first owned them because they had no debt to their name. Now they're building up a bit debt. Not what I like to see, but there's at least not leverage at the moment. Now I want to take a quick look at technicals. Make sure these stocks are not overextended. Just because they're overextended doesn't mean they're a bad buy. It just tells me there's a little bit more risk to them. Zoom, I want to say it's a bit overextended, not crazy amount. So a good portion of the risk has been eliminated. Spotify, on the other hand, I want to say Spotify is a little less overextended and a good portion of the risk has been eliminated even after this 2% gain. Now I wanted to take also a quick look for both these companies at forward price to sales ratio to see where they're at. And this is going as back as January of 2020. We can see both Zoom and Spotify are cheaper than they were at some of their peaks in, I want to say, the second half of 2020, or even some early in 2021. Right now, they are a bit undervalued compared to then, but they're still a bit overvalued compared to earlier in 2020. Remember, they are a whole different company though compared to early 2020 because the amount of subscribers they're grown, the amount of users, and just the amount of revenue that these companies have seen. So I understand why they might be a bit overvalued compared to then. But still, they are still, I want to say, investors should at least keep an eye that, hey, I wouldn't say they're screaming a buy, but I wouldn't say they're screaming a sell either. If I wanted to increase position in any of these stocks, I do have Spotify in my portfolio. I don't have Zoom. I would say right now might be a time when I wouldn't mind adding a little bit on here and there. So that's it for today's episode, guys. I hope you guys enjoy it. Take care. Have a good night and see you next time.